Jenny Horn's here with me, host of Next Gen, to take a look at Netflix in some more detail. Thing that popped out to me yesterday was the operating margin that came in better than expected. Kind of symbolizes a company prioritizing profitability. What's everybody talking about?
I mean, finally, right? I feel like this is signs of a more mature Netflix, and they've showed us that now in several quarters. But what I think is interesting is the fact that they've introduced now this ad-supported plan that's about 30% below its previous core offering. It's opened up that total addressable market. I mean, like we've been saying now, this isn't necessarily a new narrative, but it continues to benefit Netflix as its subscriber growth really continues to surprise to the upside. They added about 13.12 global streaming paid members over the period, up 13% year over year. Not too bad. Revenue jumped 12.5%, which beat the expectation. Operating income did come in around $1.5 billion. That slipped slightly, but despite a fourth quarter operating margin of around 16.9%, like you said, full year operating margin hit 21%, which was growth on a year over year basis. So as far as metrics goes, this was pretty much like everything you could ask for. Yeah. And I think we're seeing that reflected in a lot of the coverage today. I'm choosing to focus on the more optimistic to start things off. 18 firms did upgrade their, or at least boost their previous price targets on Netflix in reaction to their earnings. The median price target among the group now is around $600, which is 20% above where they previously were holding their price targets, and about 10% below where shares did peak this morning at around $541 a share. But it wasn't all positive. There were actually a few notes that were relatively cautious. I have a hard time even saying pessimistic because, like Deutsche Bank, for example, downgraded shares to hold from buy, but still raised its price target to $525 from $460, but highlighted that now, given their leadership, they said this is fully priced into shares. Shares trade at about 32 times their 2024 earnings per share and about 27 times their 2025 earnings. So they just think at this point, things are overvalued.
Yeah, there's a lot of love from the street here this morning, obviously. Even the analysts that have like neutral on it have pretty impressive price targets, pretty hopeful price targets. The fact also that there's double-digit growth for subscribers and revenue too, because the general theme of what's happening here for Netflix is a transition from super hyper growth into profit-oriented business, but there still is a lot of growth. So it's not like, they're flatlining by any means. They're still bringing on subscribers at a pretty good rate.
I think the more pessimistic tone today is that we'll stop seeing an effect of the ad-supported tier and like the various password sharing crackdowns. This will stop benefiting them eventually, and they need a new leg of growth. I mean, that's, I think, being a bit picky because what they're doing has worked, and we've seen Disney, Paramount, Warner Brothers post subscriber losses. Netflix is still growing, like you said, at double-digit percentages, so they're doing something the rest of the industry isn't. Still a growth company, while also showing signs again of a more reliable, more mature Netflix.
I feel like the content's been hitting a little better too. I'm not gonna lie, because I've kind of dogged Netflix in the past for their homegrown content as being a little weak, but they've renewed the David Fincher contract, so that's got some promise. That Saltburn movie is supposed to be real popular, pretty good.
That's not Netflix though. That's Amazon Prime.
Oh, that's Amazon Prime.
That's how I did just sign up for Netflix after like an 8-month hiatus last night in honor of the earnings, because I went 8 months without it. I didn't feel like I missed it, but now there are more shows that are emerging, so I re-signed up.
What I've noticed is they keep picking movies, like old movies, their choices of movies that kind of like flew under the radar. This is what I'll give them credit for, that I know is them. They've been picking older movies that kind of flew under the radar that they're bringing back on, and when they do, they're like the top searched movies of the day. And they've done a pretty good job doing that, where like they're showing stuff that I never even knew came out, and they're pretty good.
It's kind of like their whole philosophy with like Suits over the summer. It was like a way to get people engaged again, and I feel like it worked. Right, because Suits is a great series, right?
Generally cheaper. All right, so subscribers growing double digits, revenue double digits, advertising tier working. I mean, kind of a beast and one of a kind, really, in streaming.
And major WWE contract yesterday, which is only like the cherry on top, because that has a huge, like, cult-like following almost, which will then continue to keep those subscribers. I think that's the next part of their story is, sure, you have subscriber growth. How do you keep them on your platform instead of just hopping around?
All right. So what's the big Netflix hit that I'm thinking of?
I just signed up. I'm like a Netflix noob at this point.
Wow. Okay. All right. Appreciate Jenny Horn. Thanks for the look at the numbers.